You've said that revenue, I believe operational revenue at least, will be smaller this year than last year. Can you quantify that a little bit more precisely?
Well, if you take the first half as a whole, that's got to be a little bit indicative of the new footprint of the bank. Now, we've said in some areas we're not, the revenues don't meet our expectations. There's good and bad. I think the macroeconomic environment in Europe is very positive. If you look forward, a lot of predictions now for run rates of growth at the end of the year for the Eurozone of up to 3%. And that's way overtaken now the US. So we should be well positioned. We're very, very exposed to interest rates going up, very positively exposed. If they go up, we make a lot more money without any additional cost. And client activity levels genuinely were low across the sector. I mean, our American peers who've reported already said pretty much the same thing. So there's a lot of positive tailwind to that. But with the timing of those improvements is difficult to gauge.
What do you expect to spur client activity to pick up again?
I think a little bit more certainty on the direction of interest rates. But there's a positive mental attitude in Europe because the PMI indicators are looking very strong right now, particularly in Germany, but throughout the Eurozone. And the France story has been a real pickup for the Eurozone.
But did you get a better sense of the direction of interest rates from Janet Yellen yesterday, or do you think from Mario Draghi we're going to get some sense of tapering? I mean,
well, there wasn't much from the Fed yesterday, was there? I mean, if anything, interest rate increases are now looking slightly less likely. In Europe, there's an interesting picture, which is that we're seeing the prospect of economic growth, but we're seeing absolutely no increase in inflation. So at the moment, interest rates are not moving because inflation's not moving. The central bank's not adjusting yet. Economic growth prospects are improving, so we've seen the euro go up in value versus the dollar. And the forex markets at the moment are taking the strain. The bond markets, the government bond markets, haven't changed very much yet. Although we've seen the yield on the Bund go up.
Globally, the inflation problem seems to be the same, right? Even if you get it everywhere else, you don't get it in wages.
That's correct, and that's as much a technology phenomenon, I think, which is a global phenomenon. But the macro picture is still very good. And interestingly, in the world, there are some difficult hotspots. There's still some geopolitical difficulties. But most of the emerging markets, the Eurozone and the US, are all showing reasonably good growth prospects.